Hello and welcome to the Business Standard Morning Show. I'm Binu Sandhu. It's the 20th of November 2023 and here are the questions we will be answering today. How much money did ICC Cricket World Cup 2023 rake in? How will India benefit from the IPEF supply chain pact? Will markets extend the rally this week? And what is the Biden-Xi Fentanyl deal? Who will pay over a lakh to stay at a hotel for a few hours? Well, a lot of cricket fans are doing just that to watch the World Cup final. The success of the event has once again proved that the 50-over format is still on a strong pitch with all its surprises and scares, and it is no less lucrative. Beyond the boundaries, an economic extravaganza unfolded for brands and advertisers, breaking a few records and reshaping the landscape of sports marketing. Abhijit Kumar has a detailed pitch report.
The ICC Cricket World Cup 2023 turned out to be a financial powerhouse. The world of marketing rode the cricket wave on the back of unprecedented viewership, drawing billions of eyes from around the globe. And it has been a feast in terms of advertisement revenues. According to a report by TAM Sports, this ICC World Cup has shown a remarkable 19% increase in average ad volumes per match compared to the 2019 World Cup. Brands and advertisers recognize the potential of Hotstar, the official streaming partner of the ICC Cricket World Cup, and raced to showcase their products in commercials. During the first 39 matches of World Cup 2019, the number of advertising brands and categories shot up by 32%. For the same number of matches in World Cup 2023, it went up by 30%. As per TAM Sports, leading the pack in this World Cup were perfumes or deodorant and e-commerce wallets, both commanding an 8% share of ad volume. However, perfumes or deodorant saw a slight dip from its 9% share in World Cup 2019. The second leading category this year was cars, boasting a 7% share of ad volumes. Interestingly, perfumes or deodorant, e-commerce wallets and pan masala were the only common categories between this World Cup and the previous one in the first 39 matches. Over 50 new categories and more than 195 brands were advertised during the first 39 matches of ICC World Cup 2023, distinguishing it from the previous World Cup.
During the festive season, the mood is quite upbeat, and a lot of advertisers actually spend a lot in terms of ad budgets because of festive season and the consumption being at a peak as well. So that's one thing which is there. Second thing is it's happened in India, so time zones are favorable, so consumption is bound to go up. And the third favorable point is that World Cup is being offered free, on the OTT platform on mobile phones, which will also drive better consumption. So I think because of this increased consumption and because of these three favorable factors, ad spends by the World Cup are going to be much higher as compared to the earlier version of the World Cup in 2019. We're estimating a growth of anywhere close to 70 to 80% in terms of ad spends versus last year's World Cup.
However, the advertisement volume growth has been uneven. According to a report by advertising analytics firm Filterit, there was a remarkable 142% surge in ad slots for India's games compared to the average ad slots of other matches. But the success didn't come without its share of challenges, particularly with the high advertising prices during the World Cup. Broadcaster Disney Star aimed to sell unsold TV ad slots during the knockouts and the final at 30 lakh rupees for a 10-second slot. But media buyers were skeptical. They said a brand could run an extended campaign on a general entertainment channel with the same budget.
The only interest, if any, has always centered around India matches. Now, obviously, knowing that the non-India matches did not have the same level of either interest or attraction, the broadcaster jacked up the prices around the India matches. but the rates have by and large been comparable to the kind of rates that they were trying to extract for IPL, right? And the rates for non-India matches have been in the 1/3 to half kind of range. So I think the television broadcast has still done decently well. I think where they've fallen short is that the volumes on Hotstar have perhaps not been anywhere close.
While some brands were hesitant, food delivery apps Swiggy and Zomato saw a spike in their fortunes during the cricket tournament.
Now, what we have estimated here is that generally during the World Cup, for that month of World Cup, you will see 10 to 15% higher sales for food aggregators because of higher delivery volumes. And that eventually means 4 to 5% higher growth in that particular quarter, which means that the growth rates definitely will increase, for Zomato and Swiggy in that particular quarter because of the World Cup and the festive season clashing with the World Cup. We believe that burgers, fried chicken, biryani, all these other categories are going to see very strong growth during this World Cup, and they're going to drive revenues for players like Zomato.
Experts say the impressive performance of the Indian team kept fans glued to their screens, driving up the food delivery business.
Not only the QSRs, I think the one big thing that I saw this year is that many more restaurants than usual had the big screen up and were running promotions even on premises. So, whether they were running food or, prices off, they were offering, one for ones on drinks or stuff like that. Especially on India matches, the big screens in restaurants were a big hit. And if a lot of people are sitting at home, I don't think today there are too many families which will go into the kitchen to cook while there is Virat Kohli batting.
According to recent reports, the travel and hospitality industry experienced full bookings in Ahmedabad leading up to the India-Australia finale. This was despite the significantly elevated base prices for flights and hotels during the period. The ICC Cricket World Cup 2023 wasn't just a cricketing triumph. It was a financial juggernaut that left the cash registers ringing. There was a shift in the advertisement landscape as new age brands outshined their traditional counterparts. For the organizers of the sport, there was no lack of fireworks in their accounts either, much like the fireworks on the ground.
Meanwhile, off the field, away from high-pitched sporting battle, India and Australia entered into a supply chain resilience agreement. 12 other countries, including the United States, are part of it. The aim is to reduce the dependence on China and help shift manufacturing of crucial goods to member nations. But what is there for India in it? Watch today's special report by Ayush Mishra and Tariq Ahmed to find out.
November 15 turned out to be a crucial date in international diplomacy. It was the day when Joe Biden sat down with his Chinese counterpart Xi Jinping after a year of strained ties and exchanges of barbs. And on the same day, and in the same state of San Francisco, where the two world leaders were inking a crucial pact on future cooperation, another summit was charting an altogether different course, one away from China. A group of 14 countries, all part of the Indo-Pacific Economic Framework, signed a supply chain resilience agreement on that day. The plan is to help reduce dependence on China and shift production of critical sectors and key goods to member countries. The framework has 4 pillars relating to trade, supply chains, clean economy, and fair economy. India has joined all the pillars except the trade one. The 14 IPEF members make up 40% of the total global GDP and a third of the global goods and service trade. The members of IPEF concluded the negotiations on the supply chain agreement in May this year, and the agreement will come in force if at least the 5 members implement it. India joins US and 12 other IPEF partners to ink the IPEF Supply Chain Resilience Agreement, a first-of-its-kind international agreement that will fortify and strengthen global supply chains and foster stability, adaptability, and sustainability. Union Minister of Commerce and Industry, Consumer Affairs, Food and Public Distribution and Textile, Piyush Goyal, said. Also, the IPEF members will set up 3 entities to monitor the agreement and its implementation at various levels. The IPEF will also set up a supply chain council, which will hold meetings every year to report the progress. So what's in it for India?
The importance is there for all participant countries. India in particular, because India at this time is trying its best, I think, in terms of policy as well as in terms of cooperating with other countries to participate in global value chains. As one of the alternatives in the China Plus One diversification strategy, this contributes to India being a part of the global value chain setup. When we are able to successfully be a participant in a successfully negotiated agreement, we are that much moving forward towards building supply chain resilience, towards a participation in supply chain, global supply chains, and also supporting, in a way, our own initiatives, be that in terms of the PLI or in terms of Make in India. All of this will contribute towards that as an agreement. How it is implemented will be another aspect to it.
This agreement is an opportunity to bring more manufacturing into India against the backdrop of China Plus One policy. But international trade expert Abhijit Das pointed out some aspects in the agreement which may work against India's interests. There are clauses in the agreement which say that the member countries can impose restrictions on the imports if the labour right requirements are not met. This can affect pharmaceutical exports from India to the US. On the other hand, the IPEF provisions can also take away some of the rights that are given to countries by the World Trade Organization. Most importantly, IPEF will hamper the right of a country to put an export restriction or increase tariffs on certain products. This can be counterproductive when it comes to the important minerals and especially when India is going to mine its lithium sources soon.
To my mind, the challenges for India are twofold. First and foremost, the agreement appears to provide a legal justification to countries such as the United States to impose restrictions on exports of other countries on the grounds that they do not comply with or they do not effectively enforce their own domestic labor rights. And the second challenge arises from the fact that the IPEF member countries have committed to minimizing unnecessary restrictions or impediments which create barriers to trade. In other words, countries would be goaded into not imposing export taxes or not even imposing temporary restrictions on exports. And these are policy measures which countries have been using to nurture a downstream industry which processes primary products, which processes raw materials into semi-processed and maybe highly processed raw materials. So this certainly can have an adverse impact on India.
Like any other trade agreements, the IPEF Supply Chain Resilience Agreement offers both opportunities and challenges. Will it be able to attract international manufacturers to the country in the wake of the China Plus One policy? Clearly, it depends on how India plays its cards.
Markets experts have also cheered this agreement. Moving on, softer than expected US inflation data boosted gains on Dalal Street last week, with the Sensex and Nifty indices clocking up to 1.5% gains. The deceleration in price rise also cooled off bond yields, bringing foreign investors back to Indian shores. Rex Kano spoke to market pundits to understand whether the positive sentiment will continue in the markets this week or will the rally witness profit booking. Watch our next report.
Indian equity markets started Samvat 2080 with a bang. During the special 1-hour Muhurat trading session, the benchmark indices rallied 0.5% each, clocking their second best Muhurat trading day gains in 5 years. In fact, markets built on the gains through the week as higher than expected drop in inflation in India and the US stirred hopes that the rate hike cycle may be nearing its end. As bond yields cooled off, foreign investors covered their short positions, further bolstering the rally.
The FII long-short ratio in index future that has come up to 0.3x. However, FIs are still holding 180,000 contracts of short positions in index future, which we believe could be reduced up to 130,000 contract during the upcoming month. Hence, we expect continued short covering going forward as well, and Nifty indices could hit even 20,000 levels during the upcoming month.
Overall, the BSE benchmark index ended the week with gains of 890 points, while the NSE Nifty 50 advanced 293 points. In the broader market, the BSE mid-cap and small-cap indices gained up to 2.5%. That said, analysts believe a favorable inflation reading may not be enough to trigger monetary easing.
India will not do it in a hurry, or emerging market will not be in a hurry to do, because now the boss is sitting in US. Now, if they don't cut rates, then we will have a currency problem. It is not about rates, it is about our currency also. We need to protect our currency. Now, if US doesn't cut rates, it is safer that we maintain our rates. If Fed starts to taper down, then now I think globally the rates will again start to come down.
Moreover, the Reserve Bank of India's decision to raise risk weight of unsecured loans by all lenders and bank loans to NBFCs may add bouts of volatility in the market, as bank stocks are expected to remain under pressure in the near term. Thus, the relief rally in the markets will be tested by movement in bank stocks this week, along with trends in the global markets and minutes of the US FOMC minutes. Moreover, initial public offers by Tata Technologies and Fedbank Financial Services, which are cumulatively looking to raise 4,135 crore rupees, may keep secondary market action in check.
He's making plans for an early retirement. Business Standard.
Soft US inflation data is indeed good news for Indian markets. Meanwhile, heads of the US and China finally sat at the negotiating table after a year. One of the issues which they agreed was on to work on curbing phenanyl production. Boris Pradhan has more on this.
Over 100 times as potent as morphine, fentanyl is a synthetic opiate. Ideally, it is a prescription drug and should not be available in the open market. Cancer patients and those recovering from surgery use it to lessen the pain. But its overdose has already claimed the lives of at least 7 lakh American citizens in the last few years. Even its overprescription has also been a big factor in the increase in mortality in US citizens. Way back in 2017, the then US President Donald Trump had vowed to end what he called America's terrible drug epidemic. According to America's Drug Enforcement Administration, most of the illicit fentanyl peddled by criminal gangs in the United States is trafficked from Mexico using chemicals obtained from China. The drug is preferred by cartels as they can produce fentanyl in smaller amounts due to its potency, facilitating its smuggling into the United States. People who are exposed to the synthetic opiate often seek them out to avoid painful withdrawals, as it is highly addictive. Because of its strength, a tiny dose of fentanyl can be lethal. But the current US President, Joe Biden, has landed a breakthrough. During a meeting with his Chinese counterpart, Xi Jinping, both the leaders agreed that fentanyl production needs to be curbed substantially. China has agreed to go after companies that produce precursor chemicals to fentanyl. China is one of the world's leading drug producers. Some of the compounds it exports are combined to create fentanyl. After the meeting, Biden said that this pact will save a lot of lives. In an interaction with reporters, Biden said that the deal helps significantly reduce the flow of precursor chemicals and pill presses from China to the Western Hemisphere. So far in 2023, drug overdose has killed a record 110,000 Americans, and fentanyl was behind majority of those overdoses. The drug has become the leading cause of death in American adults under 45 years old. In 2017, for the first time ever, over 1 lakh people died annually in drug overdoses across the country in one single year. More than 66% of these deaths were connected to fentanyl. Due to this crisis, the US has okayed the sale of naloxone, an overdose reversing drug, without a prescription.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
But soon after the meeting, which many called productive, Biden called his Chinese counterpart Xi Jinping a dictator. The Chinese Foreign Ministry called it absurd. Well, that's all for today. For more news and analysis, please log into our website business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.